Hello traders, what's going on? In the previous lecture, I have discussed about the basic formation and characteristics of spinning top candlestick pattern on a price action chart. And from this lecture on, you will learn about the trend analysis on a price action chart. So in this lecture today, I am going to explain you about the basic formation and characteristics of market trend. Trend analysis is the important area of technical analysis. It also determining the overall direction of a security. The simplest way to choose a good trade signal in a trading in the direction of a trend, buying in an uptrend and selling in a downtrend. The only challenge for you to recognize this trend. You will learn how to find trends and when you enter and exit them to get profit. Are you ready to learn? So let's start. Trend is the overall direction of the market during a specific period of time. Trend analysis is the way of technical analysis. It helps in predicting the future movement based on current trend. And it also gives an idea based what has happened in the past and what will be happening in the future. Trend analysis helps in predict a trend, whether the market is bull or bearish run, and it also suggests whether a trend reversal is going to take place. It helps to understand the ongoing price direction in the market during a particular period, and it can be up or down based on the bullish and bearish market sentiments respectively. Types of trend. There are three types of trend: uptrend, downtrend, and sideways trend. So uptrend. An uptrend signifies that the market is trending in the upward direction, creating a bullish market. An uptrend is characterized by a positive rate of price change over the time. It also a straight line up that connect two or more low points. The second low must be higher than the first for the line have an upward incline. Uptrend line act as support and indicate that there is more demand than supply. Uptrend is a series is the higher tops and higher bottoms. Usually draw a line connecting two or more bottoms. This is called the uptrend line. Minimum two tops and bottoms are needed to make an uptrend line, and the more tops and bottoms used for feel confident in the uptrend because it indicates a stronger direction. The lower level or bottom act as a support and the top act as a resistance. Downtrend. In the downtrend or the bear market, the economy and financial market prices move in the downward direction. Market falling down in the moment, that means seller force the market down. A downtrend line is a straight line that connects two or more high points. The second high must be the lower than the first for the line to have a downward incline. The downtrend line typically represents the lower tops and lower bottoms combination. Downtrend line act as a resistance and indicate there is more supply than demand. Downtrend is the series is the lower tops and lower bottoms which create a downward pattern on a price action chart. In general, downward is a completely opposite of uptrend. When draw the line, it also connects two or more tops downtrend line. So minimum two tops and bottoms are needed to make a downtrend line, and more tops and bottoms are used to draw line, then you feel confident in the downtrend. This is the formation of downtrend. Price falling down with the support and resistance level. Sideways trend. A ranging trend, also known as the sideways trend. It is a trading range which has no difference in the angle between the nearest peak and top. Basically, the price is ranging within a support and resistance zone. Sideways trend are formed by drawing trend line for both high and low price on a chart. When the price is between a support level and resistance level, then it does not signal anything about the future price. If the price is falling towards support, it indicates that it will reverse and rise again. If the price is rising toward resistance, it indicates that it will reverse and fall back again. So not more today. Have a nice day. Goodbye.